Why is it Jay and Secretary Yellen's fault?
Well, particularly Chairman Powell, but also I think Secretary Yellen, were advocates of a strategy that's called go big at the Fed. After 2018, you recall at the end of the year, we had a big problem in the money markets. And so I think Chairman Powell and some of his colleagues panicked in Washington, and they decided to provide more reserves. They did so in 2019. And then we had COVID, and they even went bigger. And they expanded the Fed's balance sheet to almost $9 trillion. So what they did, in essence, was throw a lot of money at a perceived problem, but they've created a real problem now, which is that interest rates have risen. All the paper that was originated in 2020 and 21 is now trading 15, 20 points below the price where it was issued. And the banks are facing huge losses. Also, other investors, bond investors, REITs, all sorts of people that own these high-quality AAA-rated securities. We're talking about Treasuries, Ginnies, Fannies, Freddies, right, which are supposed to be low risk, but the Fed has created huge market risk. And so these outliers like Silicon Valley, First Republic have tipped over in a difficult funding market. And even JP, even Bank of America, you can see how their cost of funds is rising. It's very rapidly year over year.
Their cost of funds is rising, Chris. Hey, it's Julie. It's good to see you.
Hey.
Their cost of funds is rising. However, the whole issue of unrealized losses sitting on their balance sheets, like that in and of itself, isn't that much less of an issue? Isn't it even almost a moot point at the biggest banks, at everybody besides the banks that seem the most distressed? I mean, those banks don't have to do anything with that stuff, right?
No, you see, that's the issue. In a way, yes, it's an optics problem. So back at the end of the third quarter last year, it was horrible. It was almost $1 trillion in mark-to-market losses on available for sale and also held-to-maturity securities. But the problem, Julie, is that we originated $25 trillion worth of securities in 20 and 21 of all descriptions. That paper has very low cash flow. So if I'm holding Ginnie Mae 2s and my cost of funds is now 5, I'm losing money, okay? And so the embedded cash flow loss is the problem. And that's why you've seen some banks actually taking assets to the curb, taking the loss on a 2 or 3% asset, right? So they can go buy a 6 or a 7. And the whole industry is going to have to do this, Julie. They have no choice.